The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 7. You get the NASDAQ up 7. S&Ps are up 1. Gold's up 60 cents at $12.16. You have the silver market up 7 cents, $17.26. Platinum is up 13. Platinum's catching a pretty good bid. Trading at $9.95. We have the oil market up 51 cents, $53.26 a barrel. Notes, the 10-year note down 7 ticks, 124.18. 30-year bond off 14 ticks, 151.18. And King Dollar just can't handle a price, higher price that is, down 120 ticks, 100.10. You got the euro trading at 107, and the yen is trading at 113.04. And big earnings week, volatility's out here. Market doesn't seem to want to move.
Flat market.
Flat market. You know, and yesterday, even with Google going to all-time highs, man, you know, the other side of that coin was Qualcomm was taking the NDX 100 down, Google was taking it up, and was ended up flattening out.
Wild, man.
Wild. It's a beautiful thing, man. Totally. Now, let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at noontime, noon to 1, Kevin Hinks, Scott Connor, they get a great show. You want to understand options upside down. On Thursday, you want to understand the futures market upside down. Guess what? It's free. It's free. It's on every day. It's an amazing program. And if you haven't test drove the Thinkorswim platform, it's very easy to do. Come to our website at TFNN. You can see the banner on the side. You hit the banner, bring it up. You'll be able to trade with paper money. And as Tommy and I say many days, every day, if you're just starting or you're getting, that's how you got to get into it like that. Do you know what I mean?
Definitely.
You know, so you understand how these different markets move. You know, and what we have had, we've had flat markets, but we've had quick moves also.
Sure.
Kevin Hinks, what's going on?
Tommy O'Brien. Good morning, guys.
How you doing, man?
I'm doing good. How's everybody doing?
Good. Hey, I know that bond market, huh, man?
You know, we were talking late last week. Oh, it looks like this bond rally's over.
Yeah.
Right? They broke big last week. 10-year yield popped.
Right.
Well, I guess the bond rally isn't over.
Yeah.
So, you know, it's amazing to me. This market seems, Tom, on the surface jittery, doesn't it?
Yes.
It seems like there's not a lot of confidence, yet the VIX sits at lows. And can't, you know, yesterday it did creep up from 11.5 to 12, so it did make a small move. But it's still sitting points even below the average.
You know,
and that's indicative for this market kind of grinding higher, but not for the inherent risk that there appears to be.
Well, you know what I'm loving is that when I'm listening to you and Scott, and you know, it was awesome hearing about the bonds, because like you've heard me say the same thing. The bond market was supposed to be dead so many times, and in myself, I remember about 7 years ago, man, I'm shotting bonds, and I got killed, man. I was like, oh my God, you know what I mean? and so I'm because of that, of course, I'm always more careful, right?
Sure.
With the bonds, right? So as you guys had gone from the bonds to the VIX, right? What I loved, and it wasn't, you know, you guys were basically showing that, hey, listen, man, you know, this thing is getting low. But you know what has been happening is that a lot of financial shows, they're saying, oh, the VIX doesn't work anymore. I'm saying to myself, thank you, God. Like, that, folks, that's almost impossible. Because if you understand how the VIX is structured, it just means that no one's scared. And guess what? That's a big heads up, man. Do you know what I mean?
Yeah. The VIX doesn't work anymore. That is a self-indicting statement right there.
Isn't it?
It means that, yes. You know what that shows? And it shows complacency.
Right.
Right?
And
you got to have some excuse for why it's not working. And you can't say, oh, well, people are just being complacent. You got to say, oh, it doesn't work anymore. it works fine.
Exactly. And that's my point. And folks, when you listen to the program and you listen how they break down the VIX, they make it very easy to understand, because the VIX is on a fundamental and a technical basis. I mean, because it's flat, it's out and out. Are you putting on insurance or not putting on insurance? And guess what? When no one puts on insurance, the house freaking burns down.
Right. And that's not only, remember, the VIX measures the SPX,
right,
which is options on the S&P 500. But every single stock that trades options will have an implied volatility.
Yes.
And it'll show you where the inherent risk is for that stock. That VIX is just the implied volatility of the SPX. Every single stock has an IV, and Thinkorswim platform shows you how to measure that.
Right.
And look at it and gauge if it's high or low or in the middle. That's the beautiful thing about it.
It is. So what are we going to talk about today?
We're going to talk about, again, a low volatility strategy.
Okay.
The calendar spread. But we're going to show ways to embed vertical spreads into the calendar spread, creating what we call a diagonal.
Okay.
So, yeah, it's not only calendar spreads, but vertical spreads embedded in there.
Wow.
So we're going to do a lot of work on that. A little bit of an advanced topic, but one that we feel everyone can understand if we do it nice and slowly.
And what happens, folks, is that when you listen to the program, the bottom line, within 6 weeks, you'll know the option.
I'm always learning, man. They were showing statistics, and that you're buying in between the bid and the offer,
Yes.
and you can see how many people are buying on the bid, how many people are selling the offer, whatever it is, all that stuff. I'm for sure, man.
Option stats page.
Option stats page, right here today, 12 o'clock. Kevin, have a great one, a safe one.
Have a great day, guys.
Thank you. Tommy and I are coming right back, folks. You stay right there. Dow's up 25, Nasdaq's up 10, S&Ps are up 2.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the Dow Industrials right now up 25. You get the Nasdaq up 10. S&Ps are up a buck. Let's go take a look and see what the strength versus the weakness is inside these indices. So inside the Dow, the strength out here is DuPont. DuPont is up 2.5%, $1.84. IBM's up 1.9%, or $3.26. Caterpillar's up 9/10. Taken away from it, Verizon is down 4.2%, or $2.19. Johnson & Johnson is down 2.2%. They both come out with numbers. We'll go over those numbers. Merck is down 1.5%. Inside the NDX 100, strength out here is Micron Tech. That's up 4.3%, or 95 cents. You get Western Digital up 3.9%. Yahoo is up 3.8%. What's going on with Yahoo, folks, is that after it closed last night, they come out with a statement that they were going to delay the Verizon deal until the second quarter. But what the market loves about it is that there was nothing inside of that statement that the price was low or the Verizon didn't want to do it.
Sure.
You
And
know?
they said they, I think, still expected it to go through in the second quarter.
Yeah.
But it got delayed, right? We'll see what happens.
Yeah.
But I know what you're saying, because they really didn't know. And the fact that it got delayed, they're doing more due diligence, something. You know, they said give us a little bit more time here to make sure that we make sure that of everything.
Yeah.
I think.
And I think a lot of it's going to have to do with, it's vicious. You buy a company, you know, they got hacked, so they know they got hacked. Now the question's going to be, what are the law bills going to be? Because you're buying that liability.
Yeah,
right.
And
Do you know what I mean?
Yeah, and that's what they probably want to go through. I was listening to some people and their takes on the situation.
Right.
And, it's like, what processes did you have in place? How negligent were you? Probably is what they're looking at. And that how negligent were you? Is there other stuff that's potentially because you were that wide open, maybe, or so they're going through all that stuff where maybe they wouldn't have dug as deep. Because they said it made sense that they literally go through the exact processes now, not even just like what's been exposed, what's there, but just what you were thinking as you were building that process of the structure of the company to keep track of the security, and were you paying enough attention, right?
Right, because that'll be in the suits.
That'll be in the suits.
Because the suits are coming.
And if you're oblivious to it and you're a company like, Yahoo, that's pretty negligent, for that type of a company to not be aware of basics in terms of protecting yourself, and that's probably what they're going to be looking at.
Yeah. So taken away from the NDX today is that you got Vodafone's down 2.6%, Mylan Pharmaceuticals down 2%. That stock just keeps going lower. Regeneron's off 1.5%, and eBay is down 1.4%. Let me see. Does eBay come out with numbers? It's so funny when you look at eBay. It's like you think they are concerned rising Amazon competition. I know it doesn't come out with numbers, but
go back to that one, the top one, because I think it was Alibaba. That's what Alibaba revenue beats estimates, so maybe that's what if Alibaba's stealing even.
Everyone's stealing off eBay.
Amazon logistics footprint in the U.S. only getting bigger. Right? They're all just kind of eBay slips on concern about rising Amazon competition in autos. There you go. Amazon's auto push, there you go, may threaten fragile eBay sales growth. So I wonder, so is eBay getting some good, maybe auto resales? Individual people, I could see that.
Oh yeah, no, they've had autos for quite a while.
Yeah.
And if Amazon's it's just crazy, man.
Why not? They're going to be in everything.
They're going to be in everything. Amazon's flat today, trading at 817. Come out with numbers on the 2nd. They're animals, man.
They are.
Imagine what is hard for me to comprehend is that you have a company that's growing so tremendously. Like, how do you run that, right?
Yeah, no, credit to those people and credit to Bezos, no matter what you think, man.
Seriously.
Because the growth in those companies, and same thing with Facebook, right? When you're growing that fast, it's amazing just kind of the hiring that they need to be doing on a constant basis. Those HR people, they earn their paychecks in those companies.
Right, and the buildings he's putting up, right? And it's
you got to, right? You build, when you go to that stage where you are doing that massive growth in those early, and Amazon, they're so big right now, it's not as big of a deal, I don't even think, at this point, but it is remarkable going from percentage-wise, right?
Yeah, let's just look at Amazon for a second. So this is pretty sick, folks. We need to look at these numbers. So Go ahead.
No, what do you brought them up? Go for it.
When you go from watch, we're at 2017,
Sure.
right? They expect to take in 168 billion this year.
Yeah.
If you only go back 2 years, they took in 107 billion. But if you go back 5 years, you're talking 74 billion.
Yeah. Really, that's only 4 years because you're looking at 2017.
Yeah.
Whereas,
So
they're
4
going,
years.
right?
More than double.
And even 5 years, you're going from 75 billion to 200 billion.
Wow.
But in 2013, they were already a $75 billion company
Right.
every year.
Right.
The staggering amount, I think, is when you go from something like 100 employees to like 2,000.
Yeah.
That first.
Right.
See how many. Can you go back to the description?
We can
how many
see
employees
there it is, 230,000 as December 31st.
See, that's not even mammoth, right? Not for those kind of numbers. I don't think it.
No, it's not. Well, you know what? But see that's a year
only
old too.
2015, yeah.
That's that was
that number's climbed significantly during that time.
Right, amazing.
Jump to Walmart. How many? They're at like couple million, I think.
We go over to Walmart. You got
2.3 million.
Wow.
Now pull up their yearly. Let's see how much they're pulling in every year.
Wow.
Yeah. So it's interesting though, right? They have 2.3 million people.
Right.
And they're going to be pulling in, even 2018, which is 500 billion.
Yeah.
Whereas Amazon's doing 200 billion.
Right.
On only 230,000, or even call it if it's 300, 400,000.
That's
right?
intense.
So even if you put that in a per dollar revenue.
Yep.
They have a lot less employees, which would make sense. They don't have any stores.
No doubt.
Everyone's just in a processing center or, marketing, whatever it be. Yeah.
And what you have with Walmart, of course, is that those numbers aren't going up. They're straight across the board.
No, that's right. I mean, you're talking about from 2013 to 2017, only $15 billion in growth.
Right.
But you know what? When you're a $470 billion company, what is that, 3 or 4% growth over 4 or 5 years?
Right. Right.
But you know what? To their credit, they're probably happy they're just staying at that level with the type of competition. Because guess what? They're still at the same level. Meanwhile, Amazon in that time has taken somewhere out of the market or created some of that $100+ billion of their own.
No doubt. So if we go, let's
go. Some of it came from Walmart, no matter
for
what.
Sure.
Yeah.
And if we go to Target, look at Target.
See, that's what I mean.
Yeah.
They should almost be happy they're positive, right? Because
Right.
guess what? Target's not positive from 2013.
No, they're down $4 billion.
Yeah.
3.5 billion.
Right.
Right.
Percentage-wise, that's a much bigger number too, because they're only starting at 73 billion.
Right.
Walmart's starting at 470.
They have 341,000 employees. So that's not bad.
That's interesting. Yeah.
Yeah, interesting.
But they're so much smaller in terms of 500 billion versus 70. They really are on them, right? No,
big time.
Yeah.
877-927-6648. Let's go over and take a look at that dollar. The dollar's trying to make a run, well, not higher, but the bottom line is that you came off the lows here. We hit 99,885. Now, the number that it looks like it's going for, let's see, what number is that? That's 99,735 was the low of December 5th. The spike low of the 8th was 99,250. We got down there yesterday. It had light volume, but there's no buyers. That's the other side of it. Well,
how about let's look at the pound. You see that action overnight with the Supreme Court coming out and saying that May needs basically their parliament to approve their hard Brexit, and that was, of course, doing big things to the pound overnight.
And if we bring this up, so
you go smaller.
Yes, absolutely. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 28, Nasdaq's up 12, S&Ps are up 2. We're taking a look at this pound. So last night, hour night, right? Their day.
Yes.
You had the pound trading down at 124, and then evidently the announcement come up. It spikes up to 125.33, and then fades off again.
I think the announcement came out when it was up here. And that's the spike.
Oh, when it was up there, and then it came down.
Yeah,
I see. Okay.
I mean, if you can even zoom in further than that,
I can. Yeah, no, I can. Absolutely. We can do it in one day. Let's see.
Because you'll see as. Yeah.
So that was.
It was probably right here.
Yeah.
Or this is where. Yeah, and it's right at 4:30, and so I think that might correlate to 9:30 time over there, or 10:30, and I forget which. It's either 9:30 or 10:30. I get.
Yeah, 10:30. 6 hours.
Sometimes with daylight savings it's different before we, but that was so that this reaction all the way from high to low was the initial reaction. And that's, of course, just like oil numbers, just like natural gas.
And
right?
That's why you want to trade Nadex.
That's it. And then there's a pullback, and they have these currency, and that's what.
See that you could have traded both sides.
Oh
of that.
Yeah, I was looking at pound US dollar this morning, afterwards, because I was interested. I woke up early, like 6 o'clock. I'm watching the news, and of course 6 a.m. it's down here. But it was big news, of course, and so I knew that the pound would be reacting in some way. And if you were up there, if that's what you're doing, if that's what you're into trading, and a big news event like that, people will be setting their alarms to wake up and trade that for sure.
And what's going on there? Their Supreme Court folks said that that May has to go to Parliament. Let's see. Theresa May faces new set of hurdles in delivering Brexit after the UK's highest court ruled that she must pass an act of Parliament before she can open divorce talks with the European Union. She had put something out yesterday that she was going to make it like a 3-paragraph deal that going to Parliament if, in fact, that's what happened.
Lawmakers lined up to say they would use the Supreme Court's decision as an opportunity to soften May's plan for a clean break. I mean, that's where you're going to have Parliament get to say. And guess what? we see in America how it works when Congress gets a say. They don't like what the president's going to do.
Right.
You know, that's what's going to happen. And I bet she that's going to make things a little bit more complicated.
It is.
Yeah.
It is. There's no doubt about that.
But it might be, where you can soften it. Maybe they try and still have some of those trade packs. That's what Parliament, some people in Parliament who don't want such a hard break, I think that's what they might just push for, still trade deals, but then it comes in if you want to do trade deals, and that's why she was going to go for the hard break, right? If you want to be a partner of that equal nature, you have to adopt whatever their policies are, and then that comes back into the immigration deal, which is why they want to do the hard break. So it's a tough, round and round they go.
Round and round they go, no doubt about it. Now, folks, as you come over to our website at TFNN, you're going to see Thursday night. I'm going to be doing a workshop. That workshop is going to be on the dust and nugget, which is the direction 300% correlation or leveraged position of the GDX. This is a free workshop. If you want to understand how these leveraged products work, upside down, come on over and sign up. We're going to be talking about the composition and mechanics of the leveraged ETF market, the daily rebalancing, which is crucial to really wrap your head around. And it's very easy once you see the examples.
Because we talk about it all the time, they're daily investment vehicles. You don't hold them forever.
Exactly.
Why? Right? I mean, you should know why.
That's right.
Especially, you're not supposed to. That's not the best, probably not the most profitable way, because they're not going to react always in the way you anticipate them, because they're daily investment vehicles.
That's right.
But you should understand why, especially if you're trading them frequently. That way you understand the methodology, how they react, how they're scaling up, how they're pulling back, why that's going to alter maybe in the long run the performance versus the singles, or the underlying.
Exactly. And when you understand that, it's just really cool because it's really cool understanding what it does compounding when you get a streak of 4 or 5 days on the way up.
Sure.
Because that's a positive compound.
Sure.
And you actually get more than 300%. And then when you get a negative compound, if it goes down 4 days, you actually lose less than 300%. So when you wrap your head around that and you see it, it's important. Now, the one that really blows people's minds, I think, quite a bit is when markets are flat and volatile, because that's when both a bull or a bear, they both lose value.
Okay.
Okay, so we're going to get through that. I can tell you, though, even when I started, years ago, it was hard to comprehend just reading the white papers versus when you put it down and say, I get it now.
Yeah.
Because the biggest part of it is understanding not the nugget and the dust. It's understanding that the portfolio that they're trading off of.
Okay.
And that's when it gets really clear. But anyway, so check it out on the front page of TFNN, and I'll show you. And then we're going to talk about how I like to trade the dust and nugget, meaning where's the dollar going and what's the weighting structure of the dust and nugget. And I'm going to show you something like right here today, because you can see the GDX is up 31 cents, right? Well, Barrick and Newmont are the largest weightings. And both of these stocks today are strong. So if you were trading these, you want to keep your eye on these big time. Sure. Barrick is up 38 cents. It already has 8 million shares. It's taken out a swing point that has 18 million. It's like, hey, man, this thing wants to go.
Sure.
Now watch. Now Newmont has been weak. And Newmont is getting a bid this morning. Newmont's going after a swing point of 37.25. So, when you start putting those together,
definitely,
as we speculate, what happens is that you have a higher probability that you may be right in your speculation. That's because we're all in the money management business and the speculation business. So
increase your probabilities, right?
Exactly.
Totally.
And what I really like about that market in general is it's a very small market.
Sure.
And then of course you come over and you take a look at the dollar and say, okay, what is the dollar doing? Because the correlation, is direct. And guess what? The dollar can't, basically get anywhere.
It's a downtrend right now, that's for sure.
It is. And it's cool. So what's cool about the aspect when you look, folks, at the dollar, so technically it's in a downtrend. We don't know fundamentally where the Treasury wants to go with it. But what we did have is that, Trump had come out and said, he thinks the dollar was too strong. His Treasury Secretary came out last night. So what happened last night when I was on the air, all of a sudden the dollar went down like 300 ticks. I said, what just happened here?
Okay.
So what happened is that his future Treasury Secretary answered a written question to the Senate.
Okay, that's Mnuchin, right?
Mnuchin.
Yep.
And what he answered was that, yes, he thought that a strong dollar would hurt the United States. He wasn't saying
Was it a more nuanced answer than that, though? I think it was.
Yeah.
Okay.
Well, he wasn't
Just
saying that he was supporting.
Right out and say
he wasn't supporting a weak dollar.
It was a nuanced answer.
Yeah.
We should get the quote up if we're going to talk about it. That's all. Because he didn't. It wasn't as blatant. The interpretation, and I agree. You know what I mean, was right. Yeah, that's this morning at 9 o'clock.
Yeah,
still.
we got to bring it down to yesterday.
Keep going. But you're right. That's the interpretation of what he said, and they had a little political speak to it, but it wasn't quite the endorsement that I believe he had when he was in person, because they asked him point blank at that point as well. And
there it is right here. So, Minutia says strong dollar may hurt U.S. economy.
That's the exact line you gave. There you go.
Treasury Secretary.
That's a negative short-term effect on the economy.
That's
I knew
the
that
one.
he had added a more nuanced.
Exactly.
Excessively strong, and that basically allowed him to say, I'm strong in the dollar, but in certain cases in the short term, and guess what?
Breathing room.
I bet we're in the short term right now.
Yeah,
exactly.
Breathing room, no doubt. Yep. Well, when I heard that, I says, oh no, the dollar's going to go up. You know what I mean? It's like, correlation-wise. You know what I mean? You stay right there, folks. Tommy and I are coming right back. You have the Dow Industrials right now up 34, Nasdaq's up 13, S&P's up 2.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome, folks. We have the Dow Industrials right now down 34. You get the Nasdaq off 13. S&Ps are off 2.5. If we go over to Lockheed Martin, they come out with numbers this morning. It's down 775. You're trading 249, and it looks like what they what was whacking them pretty good was they warned, and if you have to warn inside your numbers that they have a material weakness inside this Sikorsky unit. That's pretty intense.
Yeah. You don't want to hear that.
No, you don't want to hear that. And if you actually...
So it's a helicopter unit, I
yes,
guess.
it is, right. And if you go over and take a look at it, what you're going to see is that, Lockheed Martin had that high volume low from December 12th. That was 245, and wants to test it. And
that's scary stuff, too, because that's saying basically, you might not be able to trust any of our information that we're putting out versus, investors always want to be able to, survey the land and make their own decisions. And finding out there might be variables you can't even dig into that's scary stuff.
It certainly is. So
you get a surprise $200 billion loss or something like that real easy when you're dealing in government helicopters. And
it's what is the value? What are they placing a value at? So it's a big heads up. There's no doubt about that. And it just shows that even large companies, you can have problems. And those problems can come home to roost in about 2 seconds. Let's go see what's happening with 3M. So 3M is down 279. I'm not sure whether they come out with numbers.
I think they did.
Oh, what day is today?
Today's 24th.
24th. Okay, so let me see something.
They come out? I think they did, right?
Yeah, they must have.
Yeah, there
you go. Yeah. Okay, so
they beat by a penny.
Yeah, that's not enough.
Reaffirms 2017 guidance. They had revenue jump. Let's see. They beat their fourth quarter profit forecast. Everything looks pretty steady just from here. Let's see. Earnings per share. Net sales were down slightly versus the estimate, but that's a pretty close miss, especially with earnings being above.
Right.
You're good, yeah.
Right.
Yeah, I mean, pretty good on top of the top line. But who knows? Expectations, everything.
It is.
Maybe they're...
And this is...
That's quite a reaction to pretty much coming in, so...
Right. And, you basically, you're pulling back with some juice here, too. Let's see. And you're at highs. I guess they're just... Maybe
they wanted to, if somebody was going to buy, they wanted a bigger beat, right?
They want a bigger beat. They want a bigger beat, no doubt about that. Let's go over and take a look at Apple. So Apple is laying out here at 119. They're coming out the 31st.
It's a week from today.
Okay, cool. This one's, this is going to be a great one to see because what Apple's doing, folks, is coming into the downdraft of June of 2015. So technically, that's saying it doesn't want to get any higher. I mean, that characteristic is pretty intense. It's 385 million on a weekly basis going against 116 million and 138.
Yeah, definitely.
But I like this one here. See that bar there? That's not bad. That's at 116.
That was their last earnings, I think, right? Was it? No, maybe not.
October, November, December. Yeah, it could be. Yeah, because we're in January. That's September 16th.
December. That's 4 months ago, though.
Yeah.
I mean, might have been something else.
It's going to be wild watching this whole thing shake out, particularly Thursday. Thursday, Google. So let's pull up Google for a second, because Google went to an all-time high yesterday, and it's continuing higher. It's only up $1.59 today, but yesterday it took off, man. Yesterday it went from 803 to 820. And if we put this on a weekly...
Quite a chart.
Yep. Let's see. So you're dealing with 11.9 million. And yesterday... Well, it's going to, but it has all week. Yeah. Well, what it has definitely is that the volume will come in this thing on Thursday. Yeah. That'll be a big number. No two ways about that. Yesterday what we did do, and this is a heads up, so we pulled back slightly, but there was no sellers on the pullback either. It was light. So it's like, okay, man, this thing wants to go higher once again. We'll see whether if every time that it's been going higher, there's no buyers at the highs. Every time it's been going lower, there's no sellers at the lows. Well, there's sellers, but not enough to really move it around.
Right.
So.
And so Google's tomorrow, and who else was? There's another company. Was it Microsoft?
There was a couple other big ones. I know
for sure.
26, Microsoft.
That's Thursday. Okay, was it Thursday? I think we're talking about.
Yes,
we're getting ahead of
Thursday.
something. Yeah, Thursday.
And Microsoft, folks, is a large weighting structure inside the Index 100 too, and the Dow. Microsoft's everywhere. Yeah. So that is a big number.
Yeah.
Let's go. I don't think Intel's out there, but let's see. Intel. Oh, Intel's the 26th also. So Intel's a larger weighting structure also in the Index 100, and it's in the Dow. So that's going to be a big heads up. Let me see what time that is.
I think it's at 4.
Right at 4. Okay. So Facebook, I think we said, was in February, right?
Yeah, that's
February 1st. Did Qualcomm already come out? Qualcomm's going to be tomorrow after the market. Now that's going to affect the NDX 100. No, yeah.
Yeah, we'll see what happens with such a huge downfall within a couple of days, and then you had earnings.
Right.
They better not have bad earnings.
And O'Reilly Automotive. Yesterday I was looking at these. So between O'Reilly Automotive and
AutoZone,
it took each one of them lost $800 million in market cap.
Did they?
Yeah. That's pretty intense, man.
I think O'Reilly's a $25 billion company, so
yep.
It doesn't take much to knock $1 billion off their market cap.
No, it doesn't. It doesn't. I was surprised when I actually just looked at it, but it made sense. I mean, because it had closed the day before 274, and then it traded at 274, and then it traded down to
260.
Right.
265. Yeah.
And then it has 94 million shares outstanding.
Right. Yes, it was down like $10.
Right.
$10, 100 million shares. There you go. $1 billion.
Isn't that crazy?
Billions go quick sometimes.
I'm telling you, it really does.
It's amazing just looking at that. So they're a $25 billion company.
Right.
Target's a $70 billion company. I would not think that Target's just 3 times as large as O'Reilly Automotive.
Yeah.
Right?
And so let's go OROY. So let me look. We'll pull these other ones up here. So let's see. Advanced Auto Parts.
Okay, there's 12.8. They're all right there.
It's right there? Oh,
yeah.
Cool.
Market cap, first column.
Oh, how cool was that?
Yeah.
Okay, yeah.
Okay, so here's AutoZone, though. I wonder what... Oh, no, Advanced Auto Parts. This is different, but this is what... So 25 billion, 21 billion. Those are the two big players.
Those are the 2 big ones.
Yeah.
Yep. And then you get...
I get their PEs over here. I'm just looking.
Yeah. Those are big PEs, man.
Yeah.
When you're...
Right.
We're looking at, folks, Advanced Auto Parts is 23 to 1. O'Reilly's 25 to 1. What that specifically means is that you're giving... them $25 to make $1.
Right. You're expecting some growth for those PEs.
You better have growth.
Yeah.
Right.
Not when Amazon's coming into your market.
No. A lot of that, too, was if in fact, when Trump said he was going to put the tariff.
The parts, for
the
sure.
Tariff
and everything.
Tariff on the parts will be a big deal.
Yeah.
We had a question about one of the gold stocks out here. We'll get our head wrapped around this. Vista Gold. As soon as we come, Tommy's and I coming back, we're going to talk about Vista Gold, folks. Dow Industrials right now up 27, Nasdaq's up 12, S&Ps are up 2. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, we got a lot of great programming coming up for you. We got our man, Mr. Basil Chapman, coming up next. And then, of course, we're going to Chicago. Swim lessons. Steve Rhodes will be up after swim lessons. Dave White. I'll be back from 3 to 5. And our man, Mr. Andy Heck, will be talking commodities tonight.
You got it.
5 to 6.
That's it.
It's a beautiful thing.
Totally. We're looking at Vista Gold, right?
Oh, thank you, VGZ. Okay, so we had a question in the den about Vista Gold. Now, Vista hasn't moved, folks. Okay, so Vista is trading at 96 cents. Low for the year is 27. The high is $2. This equity, the way this equity trades, it has a real personality. I like the setup. What does happen with this equity, though, it just stays, and then all of it takes off like a rocket ship. So I still like the setup. You know, you have a high volume swing out here at $1.10. If we bring this back, what you're going to see is when this took off last January, it was pretty amazing. Okay, you started out at 28 cents, and it ran up.
You said for the year, but it's for the previous 12 months. That's you caught me as you'll have to make sure because I said, oh man, the year, and I looked. Let's do it, but yeah, quite a run either way, man. 27 cents up over $2. Go ahead.
Over $2, and it's at $2. It's a high volume swing, which is nice.
Yeah.
You know, but watch, I'm going to bring you back. I mean, if you own a Vista Gold, you know, you have to be selling this thing too. We owned this last year on the run. No, we didn't own it on the run. I happen to own it, and I let people know I owned it. But we didn't catch it. We own it right now, and I'm owning it for the aspect to make a run to 165. Because if you bring this back, what you're also going to see is that this is not the first time that it's done this.
Yeah.
This stock likes to do this. And they have, so Vista also is a exploration company. This is important to understand because when people call in, you'll see that they have no revenue.
That is important.
It's huge.
For sure.
They have big assets, though.
Yeah.
No revenue. They've still been working on a very large project in Australia, and that thing is getting closer and closer. But that's important to understand and to wrap your head around.
They have Mexico in there as well.
They do. Baja, California, and you know. So I still like the trade.
For sure.
I absolutely like the trade. And what does happen, and here, if we go over to Great Panther, what you're going to see, these things used to move together. Now, Great Panther took off, and you know when I had Bob Archer on, one of the main reasons that took off is that they have just made a new deal that it looks like they're going to get a new mine up and going within 2 years. And if you look at Great Panther has a high volume high at $5. So it's like, okay, man. And I said to Bob on the air, I says, wow, I was always wondering, you know, how could you get it back up to $5?
Sure.
Well, that might be it. You know. So We'll see whether
Get some gold action at the same time, probably.
Yeah.
Yeah.
Oh,
Right.
both.
No, right.
Both.
Right.
That
Price
would be
of gold, all that.
Price
Silver,
of gold.
you know,
No doubt about it. And something to remember if you're in the metals market, folks. Okay, that it takes the average is 10 tons of dirt to make 1 ounce of gold.
Okay.
And that's a good company.
Okay.
Isn't that crazy when you think about it?
Sure.
10 tons of dirt to make 1 ounce of gold. And
Sure.
you got to take the dirt, you got to put it in the, the mill, get it out of the mill, send it to the, gold bank. Gold bank pays you. Then you still got to get it into a coin or a bar.
Yeah. No, and sell it,
so
right.
it's a lot of work. And when I look at value, it's like, okay, man, you buy a shirt at 50, 60, $10, whatever that is. When you multiply it times that what the price of ounce of gold is cheap. To me it is.
Everything's
anyway.
perception.
Everything's perception. There's no doubt about it, man. Volume-wise out here, let's see where we're at. So 211 million on the NYSE. On the NASDAQ, we're at 489. So the NASDAQ has a bit of volume.
Close, yeah.
Totally. You stay right there, folks. I'm Mr. Basil Chapman's coming up next to Growl and Prowl for you. Don't forget about the workshop I'm doing Thursday. It's free. You can sign up right now. Thanks, pal. Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.